Welcome everybody. So my presentation today is on unlocking greater purchasing power with a reverse mortgage. And as you've met here, we've got Alex here too. Sorry. I am Charlene Moore. I'm a licensed mortgage broker with Bricks Mortgages. I specialize in reverse options for my clients that are 55 years and older. My goal is to help find the best mortgage option for my clients by understanding their current financial situation and goals. And then I present them with 2 to 4 options. So it could include downsizing, right sizing, using an A lender or a HELOC. So I like to consult with their realtors, tax accountant, financial advisors, and lawyers if they would like. And because I believe that it actually helps the process, it helps to involve all those that are the consulting experts within each field. And yes, we have Alex here today. He's from Equitable Bank.
Yeah. Hi, everyone. So yeah, thanks for having me on,
Admit you right
Charlene.
now. Sorry.
Um, I'm the regional channel manager for reverse mortgages at Equitable Bank. So I'm not sure how familiar you are with Equitable, if at all. But basically, when it comes to reverse mortgages, we brought out our reverse product about 6 years ago. And what we had seen in the market was that the existing reverse mortgages that were there, weren't necessarily always had the best terms and conditions and as customer friendly as they could be, as well as lots of, misconceptions about reverse mortgages from the past, basically. So the product that we brought out is trying to combat that, bringing something fresh into the market, which is very fair to the customers, great rates, and just trying to make it a simple product and demystify it as much as possible. We've been working with Charlene for a number of years now. And, one thing that stands out is that, Charlene's very dedicated to her customers. We always know that when she's doing a mortgage for someone, she's making sure it's the right fit, whether that's on the A side, alternative lending, or reverse mortgages. The customers that you work with are going to be in safe hands with Charlene. So in terms of just if anything comes up throughout this presentation, any questions or anything that are specific to Equitable or anything else, then more than happy to help and answer some of those questions alongside Charlene, as well as we do have the chat box as well. So if anything comes up as well, you can just pop it in there and I'll try and answer as well.
Thanks, Alex. So we've got a fantastic lineup here today with some examples and strategies that I'm confident will help you in this competitive market that we're in right now and helping our clients that are older. So I just wanted to quickly actually acknowledge the great work that you do as realtors. We know that you're not just selling homes, you are taking care of people's housing dreams and goals, and you're solving their problems. And it's a very powerful thing that you're doing in their lives. Just touching on briefly, why would your clients want to consider a reverse mortgage and how could it help them possibly? So for retired homeowners on a fixed income, options like a conventional mortgage or an alternative lender are not always possible. These products require monthly mortgage payments, which could exceed their monthly budget or disqualify them due to income requirements. So if they're only using cash from their home sale to purchase, it's going to limit the price point that they can purchase in. So the home equity, alternative mortgages, conventional, I work with all of these lenders, but they are limited in the fact that there is monthly required payments for the clients. Whereas a reverse mortgage, the monthly payment is optional. They can make an interest-only payment if they would prefer, even up to 10%. So just a brief overview of reverse mortgage, and as I am a mortgage broker, I work with all the products. So throughout this presentation, we'll learn a little bit more about this. So reverse mortgages are often advertised as a means to keep owners in their current home. However, they actually can be used in improving purchasing options for your clients. There are 4 main ways that reverse mortgages can expand their options. The first here is purchasing a new primary residence, purchasing a second property, providing a gifted down payment for family, and also purchasing after a great divorce, which is on the rise right now. So we're going to dig in deeper into all of these throughout the presentation here. So you may currently have a client that's like 78-year-old Jack that we just helped. It's a similar situation. His townhome isn't suiting his needs anymore. He was looking to put money down on a pre-built condo in Langley, but he didn't have the cash available. All of his equity is tied up in his home and he has no savings, and his place could use some rentals before he's making his selling of his home. So you may have clients in a current situation. So how can you help them fulfill their dreams and make a pre-built sale at the same time? We'll look into how that's done in the next slide here. So this is what we did. By putting a reverse mortgage on his current property, we're able to pay out his mortgage, get him some money to get some renos done for selling his house in a few years, and then he got the funds that he needed to put down on a pre-built condo. So Jack's very happy as he now gets to look forward to moving into his new condo in 3 years without the stress of a mortgage payment, giving him peace of mind. Well, the realtor was able to make a sale that otherwise could not have happened. And in 3 years, the realtor will also be able to sell Jack's newly renovated townhome. So it's a win-win. And, you know, if you think of clients that you may have right now that this could possibly be an option, or if you are wondering about this process, that's one of the ways that can help your clients.
Yeah, I'll just comment on this as well, if that's okay, because
Oh yeah, go ahead.
we had discussed this before. But the thing which I think is amazing about this really is just that originally that individual, that borrower, probably had no idea that they could even do this, and it was something that may have just been a dream, or something that was not necessarily possible. And then the idea of using a reverse mortgage, which was something that they're probably unfamiliar with, really opened up doors that they didn't know were available. So I think that's why I like reverse mortgages as well as much, just because it really does allow everyone to get a bit more creative on how they can actually find the home that they want, or action the actual plans that they have, basically.
This next client here is just recently helped a client. I just changed the names, obviously. So anyways, right size and buy more homes. So even though your clients are selling their longtime family home and looking to buy something smaller, it's not necessarily that they're downsizing the price point. It's called right sizing. They're just going into a different property. So in this example here, Harry and Sally, they have Langley home. They're on a limited income. Their home is worth 1.2 million right now, but they would like to move into a luxury condo in White Rock and to suit their lifestyle and be where they want to be. So interesting for this price point, it's not necessarily downsizing the cost. So it's actually going to be a little bit costly for them. This is where a reverse mortgage comes in to help. So with this, what we were able to do is, because obviously they're going up in price, they can't qualify for a traditional mortgage due to their low income. So it's not really an option for them. So to address this, they used a reverse mortgage on the luxury condo as a purchase. So they're eligible for over 600,000 with a reverse mortgage. And they just use 400,000, 420,000 to cover the shortfall. And then they're able to have availability of almost 200,000 in their account. And so this is actually very beneficial for if you have clients looking at this option, because even if they can financially do it, they may be hesitant to if they don't have available funds. If they've used up every cent in buying a property, they may still not want to make that move, because for emergencies and different things in the future, they want to have some funds available. So it became a very viable option for this client. So the realtor was able to sell their family home and then help them make this purchase in White Rock at a higher price point. But when you think they don't actually have a mortgage payment with that, it's optional. They're able to move into a nicer property and not even stress about it. So this example here is if you've seen your clients wanting to purchase an investment property or thinking of doing it or would like to do that. Well, this was the case here with this client. They had a mortgage payment and they're wanting to purchase a rental property that they could rent out now, a property in Kitsilano, lower their overhead. And then in a few years, if they would like, they can move. They're planning to move into that property when they're ready to make that big move to the city. They actually love Kitsilano. Anyways, their income is very low and they don't really want to, they actually have investments, but they don't want to pull out of the investments because they get a tax hit right away. And after talking to their financial advisor, they, realized that wasn't their best choice. This is what we did. We by paying out their current mortgage, their mortgage is at $6,550. So we were able to pay that mortgage out. So they have no monthly payments due on that. Then with that, because they were able to qualify for $1 million, they had an extra 400 put down on a rental property in Kitsilano. They rent out the property for $3,000. They're making rental income. So now their monthly, even with the condo fees, insurance, their monthly expense is actually only $767, and they've made an additional purchase that they can move into in the future. So they were very happy. Realtor is very happy. Yeah, the only way it would work with them, because the income qualification wouldn't work, but because they've zeroed out their principal residence mortgage, it allows them to do an A lender mortgage on the rental property. So I'm not sure if you guys are familiar, but you can't put a reverse mortgage on a rental property itself. This is just how you can maneuver it, though. It'll make it work. So I would work with the A lender too on that.
This one, so I don't know this one very well, but did this open up, how many transactions did this open up? It opened up the rental property transaction and then potentially the selling of the primary home at a later
down the
date.
road. Yeah. Actually, and I just for simplification purposes, I put it to one property, but the client I helped with was actually a retired real estate agent, and they were purchasing their 10th property. It was a very complicated transaction, but we made it work. It was wild, but it was pretty, they were very savvy, very smart. And so it's not always about just eating up equity in a property. It's actually using it for investments. So it was pretty cool.
Well, that's it. I feel like they've been seen as like a last resort in the past, and now people are realizing that actually they can be a really, really useful tool
Yeah.
as a primary option for financing rather than just last measure.
Yeah. And they've got now 2 investments on this one, so it's great. Got to change the mindset on it, I think. So this other example here is also a second property, but it's a vacation home. So with a vacation home, they're going to use the funds from their property. Wayne and Jana here, they wanted to purchase their vacation home in the Soyuz. So a place for their family and their grandchildren to go to and spend time together. So their current home is worth 1.5 and they're 78 years old. So they're able to take out a reverse mortgage for 795,000 on that property and use that money to buy a property in a Soyuz without a mortgage. So they used the full amount and paid it outright. So they were able to fulfill their dreams where they had a place they can go to with their children, grandchildren, becomes part of the inheritance down the road for them also. And so it's another sale for a realtor if that's clients looking to do that. I have a couple right now that are all looking in the Okanagan. It's like their next big move. So yeah, this is definitely helpful in this case. So another big thing is gift to down payments. I'm not sure if you guys are having this right now, but many clients are wanting to help their children, grandchildren to get into the market, and this is being done with gifted down payments. So some will start looking at maybe they should pull out all their investments and their funds, but there is a negative to doing that. Once they talk to their financial advisor, the tax and like hits that they can get can be very high. It can be 30% even when you're pulling on a high end of a RSP. So in this case here, the homeowner, they owned a detached home of $1.2 million, and they wanted to be able to help their children get into their own homes. So in this case, yeah, they didn't want to, I just trying to use it from just talking from my head here. So, so how can you assist them, right? So if you've got clients like this, they want to help their kids and they want to leave a family legacy. So this is how we do it. In the next slide. So by taking out a reverse mortgage, they want to be able to give their children 100,000 each as a down payment towards their purchases. So by taking the reverse mortgage out, they were eligible for up to 512,000. They gave 100,000 each to their son and daughter. And this was tax-free money that they were giving to them. So there's a benefit for doing this while they are alive also. That's another thing to talk to a tax accountant about. But this definitely opened up the option for clients to be able to have that down payment for the children, help them to get qualified easier. Even with the first-time home buyers mortgage, they're still quite high, the monthly payments. So if they got a good down payment, it's going to open up that possibility for them. So this could, open up 2 more sales. So the other way of using a reverse mortgage is with a gray divorce. So in these situations, it's very stressful already and it is on the rise. And like, how can you help your clients in these situations? Heard of some clients where they've sold their home and they've gone and rented because they didn't think this was an option. So, that becomes even more stressful for them. Here, they've owned a home their whole life, now they're renting. So Tom and Megan here, they're a Surrey couple and they're divorcing and then they're 70. So their goal is to maintain home ownership and they want to be able to stay in the same area. So how can you help them with this purchase and when they're living, like when they're on a limited income at the same time? So normally without a reverse mortgage, yeah, they would maybe have to sell and rent, or I actually had a client, they were still living in the same home together, trying to make it work, even though they were divorced. So that can be very stressful. So this is a solution that they can do, is that by using reverse mortgage, there's 2 ways of doing it. So the first way is called a spousal buyout. If they put a reverse mortgage on their home they're in, they could Tom keep the home with the reverse mortgage on his portion and then pay out Megan the 466. And with that, she's able to go and purchase a home and put a reverse mortgage on her home. So she can then purchase a home for 800,000. So that would help the realtor or help yourselves in showing that as an option for your clients. The other way of doing it is that they sell their current home and then they can both use a reverse mortgage to purchase a new property. The reason they're having to do this is because their income is lower because they are in their 70s. They're both on pension incomes. They can't get qualified with an A lender. So this is the only way for them to make it work. But they still are homeowners and are able to move on with their life. So those are my main ways here. So, a lot of realtors, they don't know that reverse mortgages can help in all these different ways. And so it's here to help you, understand the benefits of reverse mortgage when it comes to purchasing, to be able to provide other solutions for your clients. Whether they're right sizing, downsizing, depending on their situation, just knowing that this is another option can be helpful for hopefully for realtors, and well, it is helpful for realtors and opens up other opportunities. So I don't end my presentation. Do you guys have any questions?
No, that was really informative. Thank you so much. I guess I do have one.
Yeah.
What is the interest rate for the reverse mortgage? Like, what are you paying interest-wise for that?
So it depends on the product. So just like a traditional mortgage, like with traditional A lenders, there's 3-year term, 5-year terms, variable. They just did have a promotion. It's over now, but right now you can get up 6.59% is about the lowest. Is that right, Alex?
That's
Right?
about right. And, the rates are, slightly higher than a typical mortgage. That being because, when we have the funds, lent out, it's a good chance that we won't see any repayment on that mortgage for potentially sort of, 10, 20 years in some cases.
Mhm.
So that's why, they are priced slightly higher. But we are, as a bank at Equitable, I know we are trying to make sure we drive down the price as much as possible. So we think it's reasonably fair, considering how it can be used. But usually they are slightly higher than what you'd see on a regular mortgage right now. Of course, right now mortgage rates are, pretty high. But yeah, around the sort of 6%, 6.5 sort of range at the moment. Yeah.
Yeah, so like when I work with my clients, I'll show them like a 5-year kind of a game plan so they can see where their rates will be at. Even Equitable has a great like chart they have on their website, but I use that as reference. When you can
Mhm.
see as how a home is appreciating in value, even if it's I'll show it 3%, 5%, 7% value, depending on the situation, because obviously markets have been, I think an average is what, 10% though over the last how many years? It's quite a bit higher, but we know, of course, things can change at all the times, right? So by keeping them in their home, the value of the home is appreciating, even though there's interest there, it's offsetting a lot of the times, right? So by looking at that and just taking what they need as they need it and being
Mhm.
smart about their choices, it makes it a good option rather than downsizing and not having that same appreciation, depending on like they may downsize because of necessity for stairs or whatnot, but
Mhm.
financially, it's
Yeah.
always better to downsize. You
I
might prefer
think
the right size.
I think one thing worth bearing in mind with the rates as well is, this isn't suitable for every client, of course.
hmm
But it depends what their other options are because, some individuals have ended up going to private lenders, paying, very high fees, then having to renew again in 1 or 2 years' time, pay fees again, and just kind of stuck in a cycle where it's going to cost a lot more. So, you know, I know our rates, as I say, sort of higher than a regular mortgage, but if that's the best solution for the customer, then it's usually sort of priced accordingly versus what other options are out there, basically.
Yeah. And then if you look at like some other things to consider is that they do have to start dipping into their investments before they're ready to. Like my brother's a financial planner. Some of the investments they're gaining quite well. If they're pulling out of that, they're not getting it. And then they're also getting taxed on that money as they're pulling it out. And sometimes it's lowering their monthly government benefits because now they're showing incomes. Like some of the government benefits are based on how much money so that's why it's really important. Like, I will consult with their accountant if they have accountant they work with. I will consult with their financial planner and then get everybody on. But it is interesting when I'm talking to them and they actually acknowledge like this is a better option for most people. Even if the rates are slightly higher, it is just still a better financial option. But I guess that's the
Yeah,
biggest thing is letting people be educated and at least know what their options are, and then they can make their choice, right? So. Yeah.
well, that's the other thing as well, because if people are drawing from their investments, they're losing the compounding effect of where that investment is at that point in time. Whereas if they're starting with a lower balance on a reverse mortgage, yes, interest will compound on that over time, but it's going to take longer for that compounding effect to sort of catch up versus where the investment is, which is already reaping the benefits of compound interest at a higher level already. Obviously, it will be dependent on what rate they're getting. But typically that's a big factor, especially from the financial planning conversation about it.
Yeah. And because again, I am like a mortgage broker, if there is a better option, of course, I'll present different options to them. If they can, they're in the position where they can handle. A lot of times what's happening right now is though when their mortgage is coming up for renewal, some of the payments are doubling and they're on a fixed, they literally cannot do it. So at that point, if you went to a private lender, the rates would be like 12%, and that's and they can't make those payments. So by not having that stress of making a monthly payment if they don't want to, but having the option, if they can make the interest only payments, great, but they have that flexibility. It takes the pressure off. The clients that have helped, it's so satisfying because I'll see them out and about and they're always so grateful because it has made their life a lot easier because they want to enjoy their life too. They're not they don't want to be stressing every month about that mortgage payment, especially with inflation. So, but yeah, I don't know if I can see. There's two other people there are gone because it doesn't show me. It just shows you Sandy and Alex.
Well, no, we still have Harold on the call as
Hey,
well.
Harold, you got a screen on.
Hey guys.
How'd I do? No. I got so nervous on camera. I know Harold.
No, good. How are you? You did great. You did well.
Um,
Like the other person said, very informative, and
yeah.
I love the time frame. It wasn't. I wasn't checking out because you kept it concise to the
Oh,
point.
thank you. I'm going to ask you after how it is. So, yeah, I've done a couple webinars, sometimes one-on-one. I like to do in-person information, but this is a great way to educate and get.
Yeah, yeah. No, as realtors, we got so much, on the go. So having it, like I said, you were concise. It was short, but it was informative. So I'd love to put you in front of my team.
Awesome.
Hopefully see if we can schedule it this month, but if not, for sure in the new year, early new year, it would be great to have them because they're all new agents, so it'd be great for them to you to present the same presentation, and then maybe they can ask you some questions.
Thank you. Yes, that'd be great. I think it just
Yeah.
because obviously there's a lot to it, just at least being aware of it, and then you can have
Mm-hmm.
you have a client that you think might fit, you can then just get them to talk to me and I can check out the,
Exactly.
the situation and then give them more information because we can't be experts in every field.
Right. Yeah.
So it's hand it over and it can help you guys. So
Yeah. Great. Looking forward to it.
thank you. Hey guys, I don't know if you have any other questions. That's it. There you go. Questions.
Oh, thank you, Charlene. I have to log off, but thank you again.
Okay, thank you.
Yeah, all right. Bye-bye.
Bye, Harold.
All right, guys. Thanks, Alex.
Well, I really appreciate this. I'm sorry that nobody but me of my people showed, but definitely it'll benefit them. So if we want to, if we can get us all together, that would be great. If not, we can share this and it's just as good, right? But it was great information. I'm really, really grateful. And as I am a seniors real estate specialist, this really helped me because there's certain things there I'd never heard of before.
Okay.
Yeah, no, that's really good because of course I only know of just a regular reverse mortgage, but I'd never heard of doing, I even wrote it down because I'm like, oh, interesting, right sizing. Okay, well, that makes sense.
Yeah.
So yeah, no,
Awesome.
yeah, so thank you so much.
You're welcome. Thank you, Sandy. I met Sandy through the Langley Chamber of Commerce. It's been great. I met a few
Oh, fantastic.
people. Yeah, it's been really good. There's some great events. So
It is, it's fabulous. Yeah, yeah.
awesome.
That's good. But so yeah, no, it sounds good, and it's yeah, hopefully that was useful. But yeah, if anything, if you do have any questions as well, you can always ask Charlene, and Charlene knows all the answers anyway, so she probably doesn't even need to refer anything to me these days. But it's all good. But yeah, I'll just leave on the note that reverse mortgages aren't something that people should be as afraid of anymore. I know that in the past they might have been, but we really have changed the way that they work, terms and conditions, and how they can be used. So I know they can be difficult conversations with clients just because lots of people think that they might be a bit more scary than they need to be. But Is there anything that, I can do or help Charlene with to, put people at ease with them? That's kind of what I'm here for as well.
No, that's perfect. I absolutely feel way more at ease myself. So yeah,
Awesome.
yeah,
Thank you.
no, thank
Yeah, and
you.
I'm happy to do the presentation again for your group, or like you say, you're not, or go for a beer at the, we were chatting with Kara.
Going for a beer sounds good.
Yeah, there we go. We'll do that. Oh, maybe I got my phone presentation. I can. There you go.
That's awesome. Thank you so much. And thank you for putting this all together and taking the time out to do this. I really appreciate it.
Oh, thank you. I appreciate you
Okay.
showing here too. Okay.
Yeah. Okay. Have a great day.
You too. Thank you, Sandy.
Bye.
Thanks, Andy.
Bye. Bye. Nice meeting you. Bye.
Yeah, you as well.
Thanks, Alex.
There we go. That went great.
Was I better in person, like live? I was trying to
That was really good. That was really good. Yeah.
stumbled over for a second. Every presentation, at one point, I really go, oh my goodness. I'm like notes, but yeah.
No, I think that was awesome. I think you've already got 2 potentially new presentations set up with a bigger team of people now. So
Yeah, I think it'll slowly grow. Like, I think because it is unique, like there's not a lot of realtors doing, well, you said our mortgage brokers doing, but you said more are, but I don't know if it's the same, but all different. So
yeah, maybe also for the next ones as well. You can always ask those 2 who are on there what they think,
yeah,
what other information like they need as well, because it's kind of a work in progress, right? As you find out what the realtors are going to actually need to know and what to look for or whatever. I think that was great.
Oh, good. Thank you. Thanks for your help.
Yeah.
I'll
Yeah,
do
no worries.
that.
Hope you have a good afternoon, and it went really well.
Okay, you too. Okay, thanks.
Okay, bye.